The Canadian oil and gas sector is going through a massive transformation right now that will make investors a huge amount of money. This is all thanks to the $40 billion LNG Canada mega project, which is setting us up for some fantastic returns in the next couple of years. Today's video is going to be focused on 5 hidden gems. These are undervalued Canadian small cap stocks that I think present a massive upside opportunity with some sort of downside protection. All 5 of these companies have been covered extensively by analysts and industry experts, and all of them are owned by influential hedge fund managers that know this space better than anyone. So if that interests you at all, please do subscribe to the channel and like the video. It makes a huge difference and it doesn't cost anything. And let's dive right into these 5 hidden gems. Our first company today is NuVista Energy. This is a favorite among analysts and among investors who are really focused on this space, particularly big portfolio managers. And honestly, they've been left behind by some of the massive growth in the stock market and even in this sector in the last couple of years. The thing is, they have some huge advantages. They've got a massive buyback plan with 14.2 million shares up for repurchase. That's a fantastic amount. They also are growing production and cutting costs at the same time, obviously giving them a huge advantage and presenting great opportunity. And third, and most important, they are trading at a 5x PE. That crazy low valuation means there's just about nowhere lower for this stock to go, giving you protection to the downside while they manage to continue to grow and cut costs, creating just fantastic cash flows. These guys at these kind of levels with the huge potential that buying back so many shares could bring have a great opportunity. And of course, being at such a low PE, there's very little downside risk. Next up is Athabasca Oil, which is a fantastic company, again, loved by analysts and insiders. They've bought back 18% of the company since 2021, which is obviously a huge amount. But the thing here that interests me the most, they are sitting on 80% immediately deductible tax pools over the next couple of years. What does this mean exactly? Well, thanks to a whole bunch of acquisitions and moves and space in the industry, they have been able to carve out some fantastic tax advantages, allowing them to shield their cash flows, $560 million in 2024, from taxation, allowing them to then use that cash to shore up the balance sheet a little bit, to give themselves some sort of advantage, maybe to make another acquisition. Clear indication they've protected themselves to the downside. And with the huge buybacks, again, there's a huge potential for them to return capital to shareholders at depreciated asset prices. We're seeing the stock down low, we're seeing the buybacks going, and we're seeing cash flows holding steady with tax sheltering, allowing them to buy back more shares. Huge potential there. Third on the list right here, it's a favorite on the channel. We're talking Peyto. I love these guys. We've talked about them so often. They're one of the prime beneficiaries of LNG Canada. And my big argument why I love these guys, and the same argument why so many analysts and insiders in the industry love them, is they're like a wizard of hedging. According to my notes here, they have managed to hedge their price at almost double. That means they're getting almost twice the average price of Canadian natural gas for their LNG. That's huge. And of course, LNG Canada is coming online. There's huge future profits ready to go. And it's basically impossible for them to lose money. They've hedged so well that they're just going to sit there, be protected, and present huge upside. Love that company. Fourth on the list today, Tamarack Valley. Now, according to my notes, these guys have some really fantastic innovation they've been working on. They've managed to just massively increase oil recoveries at their Clearwater facility, which has added about 20 million barrels to their reserves over the last year. They're increasing their production while cutting costs. Again, huge potential there. And they have 40% of their output hedged at $63 WTI. So think about the huge advantages that brings at the current WTI price. They're hedged with room for upside in their hedging because of all sorts of very complicated things, but they're hedged above the current price. Price drops. If we see the crash that everyone's anticipating, it doesn't really matter to these guys. And of course, They're continuing to innovate. They're finding new ways to be more efficient, which means that as they grow, they're going to remain efficient. Huge potential there. Fifth on the list today, Advantage Energy. Some huge acquisitions over the last little while. They've got a $450 million acquisition of Montney assets. Huge, instantly accretive. And here's the best thing. This is one of those things I love to talk about with Canadian companies. 10 plus years of top tier inventory, focusing on natural gas. With natural gas being the sort of main core of a lot of institutional portfolios right now, being the thing most people are more bullish on short, medium term, these guys are a fantastic option, and they're likely to see some huge gains, again, with things like LNG Canada coming online and the natural gas market in Canada improving. Now, I do want to say at the end of this video, obviously there's risks to every single company you invest in. None of these are going to, if we see another Great Depression, you're not going to see these companies shoot to the moon. I think that's probably obvious for most people, but it's important to say. Instead, what I think should happen right now, don't just go out and buy every single one of these companies because you heard some guy on YouTube talking about it. Go research them. See if you like them. A lot of my research was focused on what are institutional investors doing in this space right now. Guys like Eric Nuttall own all of these companies. And in the small cap space, I think that's one of the best indicators of what is a really successful, good opportunity. There are lots of other great opportunities in the Canadian oil and gas space. There's lots of big caps we've talked about. There's other small caps that maybe have been even more overlooked. This has just been my method of finding a couple really key, interesting plays that I think have some unique elements, and I wanted to share with you guys. If you enjoyed this video, you made it this far, please do, again, like the video, subscribe to the channel, makes a huge difference, doesn't cost anything. We're on our way to 1,000 subscribers, and we would really appreciate your support. And with all that being said, I will see you in the next one.